Do Warren Buffett and Michael Burry know what other fund managers do not? Hello friends, welcome to Finspirations 9. I am Sunil Thakker and I'll see you soon on the other side of this music. In the past 6 months, S&P is up 8%, Nasdaq is up 14%, and the Dow is up 3%. As it was during the first quarter of 2023, Berkshire Hathaway, that is Warren Buffett, was a net seller of stocks also during the second quarter. That's not surprising given the continued strength of the stock market. Buffett has sold more than $8 billion worth of stocks. And Michael Burry, remember him? That investor from the Big Short fame of 2008. He has gone against the tide using put options worth $1.6 billion on Nasdaq and S&P 500 tracker funds. Burry is using more than 90% of his portfolio on this market downturn. This brings us to the question of why are these two heavyweights selling? Firstly, China. This $17 trillion economy and the second largest economy in the world is going through a series of downturns. Every single indicator from China looks bad. Consumer spending, factory outputs, exports, fixed asset investments, all of it is in the negative. There is deflation. Big corporations are defaulting. China's Evergrande Group, once the country's second largest property developer, has filed for bankruptcy in New York. Country Garden was China's biggest real estate developer. Now it is staring down default, facing billions of dollars in losses and $200 billion in unpaid bills. 21% is the official unemployment rate in China, which China has said it will no longer publish. Rumors say that unemployment could actually be as high as 50%. Just bad news from China. Secondly, US banks. First Republic and Silicon Valley banks have already collapsed. Moody's has already downgraded 10 American banks. Fitch has gone even further, saying that a dozen banks could be affected. Big banks like JP Morgan Chase, Bank of America, Citibank. So if these are downgraded, the impact could be huge. In fact, we have seen the effect of this looming danger on the stock prices of these banks. JP is down more than 2.7%, Citibank down 4%, and Bank of America 5.6%. This shows that the credit ratings matter. Investors look at these ratings before parking their money. As you know, higher the rating, safer the investment, which means downgrade is bad news. However, it does not mean the market will crash. Thirdly, let us now see how the US economy is faring. The Fed has increased rates 10 times since March last year, and it's at its highest in 22 years. It is 5% higher than what it was last year, which is a lot. This rate increase should have pulled the economy down. More unemployment, smaller GDP, lesser consumer spending, but the opposite is happening. US GDP is to grow by 5.8% this quarter, that is twice what it was last month. Unemployment has dipped to 3.5%, that is solid job growth. It added 180,000 new jobs just last month. Retail spending is also up. Retail sales increased 0.7% last month. At the same time, inflation is down. It was 9% last year in June 2022 Right now, the core inflation is around 4.89%. Just bizarre. How is inflation falling without an economic contraction? This is a pretty weird phase. No way to put it otherwise. But what are other heavyweights predicting? Let us look at what BlackRock is saying. BlackRock is the biggest investment firm in the world. It handles around $8 trillion in assets. BlackRock feels this is all just temporary. BlackRock expects economy to flatline for the rest of this year. Employment stagnation could lead to weak economic growth, rising inflation, and labor shortages. But they say a stagnant economy is slightly better than a shrinking one. Bank of America fund managers are extremely bullish on the market. Their global survey indicates a bull market. That is the reason they have increased their stake in the market. The question that baffles the world is that the largest economy, the US, is booming, whereas the second largest economy, China, is struggling hugely. Its eastern neighbor, Japan, is also booming, whereas the whole of Europe is on a downturn. As you can see, different economists have different perspectives on all this. These are all different predictions. Why? Because we are entering into uncharted territory. The pandemic has changed the structure of the global economy. What is the long-term outlook? Is it good or bad? Only time will tell. It is an enigma. But what does this mean for us as retail investors? Where do we go from here? What do we do? Well, buying quality stocks and holding them for the long term is a proven way to generate positive returns. Warren Buffett might have sold $8 billion worth of stocks, but then Buffett has always followed his mantra of buy low, sell high. So we can safely say that he saw the opportunity to sell certain stocks at higher prices. And he did, which is not a surprise. Also, this net sale of $8 billion is a mere drop in the ocean. And yet, Berkshire Hathaway took new position in 3 residential home builders during this second quarter. Also, Apple stock remains Berkshire's largest holding by a landslide. Now, as far as Michael Burry is concerned, he has enough experience to jump in and out of different securities every few months and make outside short-term trades on the direction of the market. In fact, in January, he tweeted a cryptic message to say to his 1.4 million followers, sell, he wrote. But by the end of March, he backtracked. I was wrong to sell, he wrote. Burry could well be right about the market declining further in the short term, given the historical weaknesses in August and September. But that should be treated by us as an opportunity to buy more stocks for the long term. While we watch intently and sometimes with bated breath how the Wall Street's heavyweights move and shake, it's important for us as everyday investors, especially those young friends of ours who are just embarking on this beautiful journey, to remain focused on our goals. And that is to stay invested for the long term. As I will always maintain, when you see red, buy. Stay inspired.